About how do HFTs affect your tape reading and feel of price action? Do you feel like you have less of a read on market psychology? The answer to that is no, I don't. HFTs have been around now, God, for a number of years, and it's almost like they're part of the tape to me now. And so for me, it's just a recognition of what the particular program is of the HFT. And generally, there's a few different types of HFT programs that are very predominant. I know a lot of times we talk about the buy the new low and then these things that are kind of annoying programs that kind of try to screw with different particular patterns. But for the most part, HFTs, there's market making programs, which those are the biggest part. And they're trying to look at what the normal volatility of the stock is and what it's doing in terms of how much it should move every second, every minute, every few minutes. And there's these market-making programs. So I'm watching those market-making programs, which in a sense, they do what I did at the beginning of my career back in the mid-1990s, which was when things were in fractions, I was always making markets. Like if things were moving in quarters, for example, if a stock like Amazon was 140 bid, I might go 140 and eighth, knowing that there was plenty of people willing to buy the stock at 140. I want to pick some up at 140 and an eighth, and knowing that I might be able to kick that out on the offer at 140.50 or 140 and 3/8, trying to make a quarter, 37 cents on 1,000 shares, that would add up over time. Well, what happened was when the market changed back around 2000 when they had decimals, it created this opportunity for these programmers and algos to say, wow, wait a second, we could actually try to make markets, and the spreads are really tight now, they're in pennies, and our risk is extremely low. And so what you'll see a lot now is I still try to buy stock on the bid and sell stock on the offer at good prices, but quite often what you'll see is these HFT programs will try to then cut in front of my order and cut in front, and I have techniques for that. What I'll do is I'll throw in a bid, cancel it quickly, which will then cause the stock to tick down, and then I'll get stock at a lower price. And it's just really adapting to what the different HFTs are doing. Other HFTs, I mentioned a couple. There's the market-making programs. Then you have the predatory programs, which they're trying to sense the large buy orders and sell orders and step in front of them. And then you actually have the programs that are most important to me, which are the accumulation and distribution programs. If someone has a large buy order and they're trying to accumulate the stock with an algo, once I recognize that accumulation algo, then I can trade the stock accordingly. A good example of that would be a stock like RIM. When it starts trending up, let me go to the chart on this, see if I can kind of show you what I'm talking about. So once I see that, right here, it starts moving up and it gets above 73.20, I know that generally the accumulation algo, or the bigger players in RIM, what they do is as it starts to trend up, let me go to the tick chart so we can look at this a little bit better. Okay, so we're looking at the tick chart here in RIM, and it's starting to trend up. And what I find in RIM is as it trends up, like here above 20 cents, it'll drop out generally like a quick 5 or 10 cents. And so when it drops out and I see that it's not going lower, this is a spot that I look to add to the position. And then the other thing that happens sometimes, and this actually happens all the time in RIM, is it'll make a new high and then they'll drop it out a little bit harder, but all it will do is go right back down to this level where it was accumulated previously. And you can see that it came down to 73.20, and this is, very, very briefly, this is at 12:09 in 08 seconds, and then by 25 seconds, it's right back above 30 cents. And so I'm just getting used to like the particular program. You can see again we had it when it was in the low 60s. They dropped it out almost to this 44 cents, which looks like on the tick chart they had been selling it, and they're trying to pick a little bit more stock up here in the mid 40s. And I'm really just trading around the core position and using the HFTs to my advantage. Excuse me. Hopefully that answers some of your question. There's probably a lot more to it than that. I think let's see, gosh, I've been trading now for over 3,000 days. And so with HFTs, I've probably been dealing with those for a good 1,000 of those days at least, maybe longer. And so to me, it's just part of the tape. One of the things that I would point out to you is stocks have natural spreads. And so even though we don't trade in fractions anymore, and the spreads aren't a quarter or 50 cents, the natural spreads in a lot of stocks are still 10, 15, 20 cents. And even though at times those HFTs try to cut in front of each other and they narrow the spread, in your mind you should always be visualizing what the natural spread of the stock is so that you don't get so caught up in when the spread narrows thinking, oh, the stock is moving or it's doing something. It's really the spread is compressing and expanding, and once it moves above, say it moves up, the natural spread is 10 cents, and the stock moves up 15 cents, then you kind of shift where the bids, you believe the bid should be, where the offer should be at that point. I saw a comment on our blog or a question in the last few days. Someone said something which was kind of curious about, we talk a lot about how we respond to the HFTs. Are we concerned that the programmers are reading our blog and coming up with ways to combat our trading? I don't view SMB Capital as being that important that all the programmers at the big banks are looking to see how we're combating what they're doing. But the bottom line is we can adapt a lot more quickly than the HFTs can. It takes quite a bit of time to program HFTs and back test them and front test them and do all the things that you have to do. I can adapt on a daily basis. It's not a problem for me. So as the HFTs change and do things a little bit differently, I will adapt more quickly and take advantage of them. And yes, it is frustrating sometimes to deal with the HFTs. I think traders with less experience get a little bit more frustrated because certainly they're taught patterns to recognize in the market, and the HFTs sometimes will wreak havoc on those patterns. But what we talk about on the desk a lot of how we teach and how we use our simulator with our traders is we don't have just one particular breakout pattern. We have a breakout pattern that we record the data for, and we also have 10 subsets to a breakout pattern. So when our guys are practicing breakout patterns, they can see all the different variations of how these trades play out. And a lot of it has to do with how the various HFTs are impacted in that stock, and the different HFTs are competing with each other. And it's just one of the things that you can do to practice, and then the more you practice, obviously the more accustomed and the more comfortable you'll get with dealing with the HFTs.